Hey everybody. Gonna do a little test. It's pretty delayed. Okay guys, I'm gonna get started in a second. Looks like we're officially at our start time. Sorry for the issues with Facebook and YouTube. This is our first Q&A session, and as far as the correct platform to use, we'll figure it out. Hopefully everything's good here with YouTube. If you have a Gmail account, YouTube, you can comment to the right of the video throughout this. I think what will be best is if you can email me questions as well if you have any issues. And I'm going to get started with the Q&A. Let's get right after it. If you hear a little noise in the background, I think that's going to end up being my puppy who just decided to play with his bone at this beautiful time. So actually, one second. Okay, buddy. All right. So we've got enough questions tonight to rock and roll from today. So thanks for everybody who fired those off. I'm really going to go ahead and why don't we do this here? I'm going to just start to read off the questions that we had marked from earlier today, and I'm going to go in chronological order. Again, if you have any questions during the actual stream, you can email me or go ahead and write something up on the right side. I can actually I can see those comments from Spitz, Chris, and Jory. So thanks for that. And we now have 46 people watching. So first of all, let's go with Bravada Gold is currently trading at 8 cents US. I'm down 1K and I'm wondering if I should buy some more here and lower my cost average. Okay, so the answer is yes. I don't know how much more clear I can be. Everybody out there, you know, you need to understand a couple of different things. Bravada is one of my biggest holdings. We just solicited the company to take 500,000 bucks at a dime with a 15-cent warrant. That means that we just sent in another $500,000 bucks. That's the elite members and myself. I'm investing $40,000 on top of my already substantial position. This is a core junior holding that remains in my top 10 junior gold picks for the bull cycle. That report, by the way, for all of you that purchased it and for our premium and elite members, that report is being updated tonight, tomorrow. So you're going to have any changes to that list will be out very soon. But Bravada is not one of them. This is a situation where you have to deal with reality. There's nothing that has changed since we liked the stock initially. And I was looking at our price initiations on some of these companies when we released that report, which was in November of 2015. My puppy is playing with the hardest bone that he has on the floor. Sorry about that. So the price initiated with Bravada was 4 cents. The stock went all the way to 40 cents. And now it's back to a dime. What changed in that time frame? Nothing, except for Bravada has moved forward on several of their projects. Their partners have. Bravada hasn't had to spend the money. It's part of the beauty of their business model. But nothing's changed except for the market. The market, as far as gold juniors go, as far as gold goes, and that's what's most important today from me for a message, which is, you know, when you're getting nervous about positions that are down, we have to take a close look at the fundamentals and say, has anything changed? Has it gotten better? Has it gotten worse? In 90% of the cases, I can tell you, of any stock I've talked about in the last year and a half, nothing's changed. We might have an exception or two there, and I'll get into those because a couple of them hit in the questions. So, you know, it's worthwhile to ask yourself, has anything changed? But just remember, with Bravada, I talk about this fairly regularly. We didn't for a while there, but it's not because I don't like it anymore. It's really because there just hadn't been a lot of news out. And so, yes, long answer to buy more Bravada. Let's move on to the next one. So this is a question from a premium member. He's asking about a stock that's only covered in premium. I'll get to you guys on these questions tonight or tomorrow. I'm going to shoot another video and just go through the premium questions. And in the future, we will have premium only Q&As as well as the free. I wanted to just get this out here for everybody though now. Jagger Core Energy has come up a bunch, which I'm glad people are asking about it. So, you know, this deal has been a saga of dysfunction and really a disappointing situation from when we first got involved with it, which was about 3 years ago. And, you know, without getting into too much detail, lots of infighting and stuff over nothing for a long period of time. That changed about a year ago in December. We had some board moves and some movement on the management side in the past, you know, 9 months, and the board as well. And so now we've got a situation with a skinny board that's on side with Edgardo Russo. We saw one transaction announced. The company will be cash flow positive again, either next month or in January. It's coming very soon. So they're building from a low base, but this is literally a restart that's happened in the last few months when now Edgardo actually has the ability to do what he needs to do to grow the business. Before he just didn't, you know, always resistance and issues with the board of directors. So I believe that it doesn't make any sense to sell Jagger Core at this point. I think that the company will end up growing from here, and they're in a position where they're going to maybe making money again, and it's not going to be a ton. As far as Jagger Core is concerned, I see a couple questions here. The JEM is the Canadian, and JAMTF is the US symbol on Jagger Core. I'm going to keep Jagger Core at a hold or a buy under 2.5 cents Canadian, but probably just a hold. We do want to see some traction here, some execution that actually occurs before I buy much more. I have way too much of this stock and own it at a better price. And we've got a troll on the line here, so that's great. I feel legitimized now. But Jagger Core is a hold, and I do believe that they've gotten their act together to a degree. They're going to have to move forward in a way that's going to be prudent. They can't accelerate their growth in Argentina overnight, but they will move forward, and this will be a better situation. We should just be patient. We've already been super patient on this thing. It's not the time to sell. Let's see. So I've followed your site on and off for several years and finally bought 2 recommendations: NG.TO at 725 and 650, and SSL.TO at an average of 795 Canadian. Those are both Canadian prices. So let's see. Let me just do the math so we talk about this in an accurate manner. My thoughts are, why did you buy them at those prices? They're higher than our initiation prices. And this is one of those things I addressed in a recent update where, you know, I talked about the timing of, you know, where you got involved with the gold investment letter or where you took action. And look, you know, at the end of the day, everybody's got different stuff that's going on, and I understand that not everybody follows this newsletter every single day all the time. I know a lot of you do, which is awesome. But you know, that's probably closer to the highs maybe than the lows. So I don't know exactly when you bought it, but I've come out several times with Nova Gold and basically said that this is a strong buy at these prices. And the company's got one of the biggest gold copper deposits in the world, with the Electrum Group behind it. Some very, very big shareholders. It's a world-class asset. And I think that this is a good case of where, you know, the market has given us these prices. That's it. There's absolutely no other reason. There's nothing with Nova Gold that's gone, you know, south since the stock has started to go south from last summer. You're going to see the same chart pattern on all of these companies that hit highs last July, August, or June, and have come down substantially, most of them getting cut in half or more. I'm looking off to my right because I'm looking at charts while I'm talking and trying to also gauge some of the Q&A and things like that. So it's funny because we've got all these makeshift presidents on here with their comments. I don't know how I can end up. Let me see if we can remove them. Probably it's going to take up too much time. Might as well see what they have to say. All the ex-presidents are here. Super. Okay. So Nova Gold, same thing with Sandstorm. It's the same situation. Sandstorm is a top-tier royalty company, and literally we're dealing with a situation where the market has given us re-entry opportunities on these plays. If you look at Nova Gold, and I'm pulling up the longer-term chart here, and we look at when this thing bottomed out, which was actually in 2013, versus, you know, sort of a steady rise into late 2015 when most of the sector bottomed. The stock more than doubled from there and has come off and been cut in half. If we look at Sandstorm, you're going to see the same thing. So the question in these cases really comes down to, what do you think about the state of the gold and silver market and what's going to happen going forward? If you are a bear and you think that this was a dead cat bounce last year and that we are not coming out of the bear market in gold and silver and mining stocks, then you don't want to be a buyer. But if you believe, as I do, that the bear market in gold and silver and mining stocks ended in January of 2016, then you want to take what is really the second or the first real buying opportunity after an absolute explosion in prices from early 2016 to the middle of 2016. The pricing on, you know, the indexes, GDX, GDXJ, when the whole sector goes up like 400%, 300% in 7-8 months, it's very normal for a digestion period. The question is, do they keep digesting? I mean, now we're at a point this year where we do have some tax loss considerations to keep in mind. So I would be sensitive to that. And frankly, I think that this is a gift for those that believe in these companies. And the two with Sandstorm and Nova Gold, you're talking about two very high quality companies that you can feel confident in holding for a better market in gold and silver. But, you know, at the end of the day, if you're going to see movement, big movement in these things, we're going to need to see a better sector environment. It's really comes down to that. 90% of the move in any of these companies comes down to the general market and specific sector. Maybe 10% is the individual company. Some of them buck the trend, like we've seen with Orca, companies that have discoveries, or if something's getting bought out. But otherwise, you know, these charts are virtually the same. So we can ask questions about the individual companies, but in most cases, again, we're looking at the fact that this is a sale in the sector. So the next question is about tax loss selling starting now, which will affect the junior mining stocks. What do you say, as most feel they will only be limited rally going forward in the golden triangle? So I guess what Stu is saying is that the golden triangle will be the only place that you're going to see some action. I don't think that's the case. Oh, we've got Eliza Schuler. Don't ban me. I'm not a president. I'm a president's wife. You're good, Eliza. You're fine. So the tax loss selling season is my favorite time of year to look for opportunities and to look for not only bargains for the long term, but I've had a lot of success in my career back to when I was a broker as well, in buying ideas that are oversold in the starting right now, the second half of November into the middle of December. Some even go till the end of the year, but most of the tax selling is exhausted in the next 30 days. Some of our favorite mining stocks could be hit with more tax loss selling, not because of anything to do with the company, but because some people are just rotating their portfolio, and in particular because there's just not a lot of action on the buy side right now. We've got a fairly dead market in the junior mining gold and silver companies, and that, you know, that can create some big opportunities if you are patient and if you are prudent and if you've got a little bit of swag in you, where you can go in and put in stink bids on a lot of the junior mining companies. Stink bids meaning, you know, something like a Bravada. This is just an example, trading at 10 by 12 cents. You know, I think you can buy it right now, right here. I actually bought stock in the open market today, just another 50,000 shares, or was it yesterday? But, you know, I think with a situation like a Bravada where there's very low volume as it is, I mean, you could have a guy wake up tomorrow or next week and his accountant says you need losses, and that person has a big position in Bravada that they bought at 30 cents because they bought it when things were running. And then it's just a candidate to dump it. And he says, I got to take the loss anyway. I just want to get out, and doesn't really care about the price. So therefore, you could have a bid in good till canceled, 7, 8 cents, 6 cents, you know, who knows, put it staggered below the market. And if you get lucky, you get filled. Now, people that are not on the buy side or are not looking to be on the buy side, that are hanging on by their fingernails on Bravada, will be worried about what's wrong with Bravada if that were to happen. But that's the type of stuff that can occur at this time of year. So I would say that this year in particular should be very fruitful for people that want to find in the resources sector, in the mining sector, companies that are going to be, they're already down, they get depressed even a bit more the next 30 days, and then see a big jump in January. Even late in December, we see this a lot of times. So I focus on a little bit bigger companies for this phenomenon for the most part, maybe smaller money with the juniors to position greater longer term. But I was even looking at today, you know, for example, I was looking into GE, because GE has been absolutely destroyed this year. They just cut their dividend. I don't know what their business is like these days, but I'm going to look this week and this weekend, because I'm guessing that a lot of the institutions that are in that deal are going to be selling the heck out of it in the next month. And, you know, it's going to potentially, it's got great potential to really get overextended on the downside. And a lot of these companies also in the institutional realm, what they'll do is they have to book the losses. They book them in 2017. They need to wait 30 days to get it back on the books so that it's not a wash sale, and they can end up buying it back in 31 days. And a lot of them do that with some of these companies, and then they start to bid them up with higher prices in January. So keep an eye out for any tax loss specific opportunities that I come out with, because this year should be good for that. Let me move on here. So there's this is, I believe, a premium member. Any other juniors bordering the GGI MTS properties that are still unknowns that we should pick up? This question, I would suppose, is very timely if they are. Just focus on Metallus and Garibaldi. I mean, this is some big time potential stuff. And a lot of people go after the area plays, excuse me, and sometimes it pays off, like vis-a-vis Metallus, because they have a real correlation to Garibaldi. But a lot of the other Golden Triangle plays, I thought they were going to end up doing better than they have, just based on what's occurred already with Metallus and Garibaldi. But I don't think they're going to really, it's going to lift all the bolts in the Golden Triangle. Some of the bordering plays, I mean, you know, you got this one deal, Spearmint, that people keep pumping around. It's a piece of garbage. They go everywhere where there's a discovery and they claim land and they promote the stock, and it trades like crap. And it's got 80 billion shares outstanding, and it's at 3 or 4 cents, and it'll never move. And if it does move, all the insiders are blowing out of their stock on you because these guys will never do any drilling. So you got to watch out for that sort of stuff. So that's one stock I would avoid. Spearmint, I think it's SRJ. I see it everywhere. It's super annoying because they have promoters all over the place, and it's just a piece of garbage. I'm going to go through the comments section on YouTube in a moment. I want to go to a couple more questions. So this question from the premium member had asked about the 2 or 3 favorites in producers, juniors that are producing in gold, silver, and nickel, and have the ability to rip up in the coming bull market. So I was going to get into this, but I realized that 3 of my top producing silver picks, I believe, are all premium only. So I'm not going to get into it. What I will give you on the gold side is McEwen Mining, MUX, is a favorite on the producer for gold, and Pretium, PVG. Pretium, I think it's PTM on the Canadian side, but PVG in the US. These guys are in the Golden Triangle. They have a massive high-grade deposit that just went into production, and they've got very high-grade, very high recoveries, and these guys are going to be very profitable in 2018, even if gold stays where it is. So I think the stock will go higher, at least into the high teens to low 20s US, which is 50 to 100% higher than it is today. When gold takes off and goes over 1400, Pretium will fly. It'll go into the 30s. So buy Pretium. Nickel plays are premium only at this point. I will give some nickel ideas out to free members soon, but we've been positioning ourselves in some new nickel stuff. The other question was, assuming based on back testing that mostly producing mines do well and discovery do not. I think what he's saying here is, in a bull market, do the producers do well and the discoveries do not? Actually, it's the opposite in terms of percentage moves. In a roaring bull market, the exploration juniors move the biggest with percentages. Now, they all do well, and that's the other thing, is which ones are, you said, which ones have the ability to rip in the coming bull market? When we are in a full-fledged bull market like we were, a bull cycle that's very powerful, like we saw a bit early last year, everything goes up. Everything. It's just a matter of picking the best ones and avoiding disasters that are scams or have some shady characters involved, or that just have crap properties and junk management, because you will do well throwing money virtually everywhere. And then some deals, if you can really get snipered in on, will do better than others. But that's going to go across the spectrum, because you can end up buying producers at the right time and say they get bought out, and then you have a massive catalyst, and it could end up outperforming some of the discovery plays, which I like the best because they are the most volatile and will do the best in the next run. He lists some other plays and talks about GEM. I'm going to move on from that question and start to go through our comments here. Ticker of Jagger, I told you we have a lot of the president's questions. Southern Silver from Steven Saros. You know, good example of a crappy market. You know, this is it's the only reason that Southern Silver is down. There's no other reason. You know, this is a situation that is one of my favorite silver juniors. They also have a tremendous amount of zinc in their resource. And here's the thing, I'm not going to get into it too much, because any day now they're going to be coming out with a resource update, which could be a big catalyst. I would say in a normal market where it's not so poor like we are right now, with the sentiment just being bad, you know, there's companies coming out with good news and they're not moving a lot, which just goes to show that it's a tough market. You know, I don't know how much it's going to move. Let's say their resource goes up by 50 or 100%. You know, the stock should go up a lot. That's significant. But what'll it do? I don't know. We'll see. But I'd like to assess it a little bit more after that. I think the stock is very cheap for what they have now, and then much less when they increase that resource. It's going to be even more valuable. So I remain very bullish. GGI at MTS, Sheldon McKinley. I can talk about him. I've been talking about him a lot. I think we're at the point where you're going to see Garibaldi assays out at any moment. I was looking today after the close. I would not be surprised if we woke up and saw the GGI assays tomorrow. It's a lot of speculation as far as how good they're going to be. I know they're going to be good. Are they going to be eye-popping? Are they going to be great? Are they going to make people marvel at how amazing this discovery is? That's going to be the real question. And I'm really excited to see what we've got there, because the early indications with the core, with some of the comments, if you could read into and reread the comments on the information that Garibaldi gave out already, talking about the holes and giving some feedback on the sulfides, there's definitely something here, and it's probably very huge. We're going to need more work to find out how big and also how rich the deposit is. I think one of the things that's going to make this one stand out is the grade. The grade's going to be very high in nickel, and potentially even in a handful of other metals. There's going to be probably 7 different minerals that the company is going to find here. And so nickel's the big one, and I'll really be interested to see if they indeed hit massive sulfides on that first round of drilling. I think it's very likely that they did, but we'll see. You know, you look at the core and it can be a little bit misleading at times, but in this case, definitely exciting core. So we'll see, but these 2 stocks have probably the most potential, along with, you know, the other one that's made people a lot of money is Novo. I don't own Novo. I only own Metallus and Garibaldi, and I own a lot more Metallus than I do Garibaldi. Novo just seems a little strange to me. I know what they're saying about this being another Witwater, which is, you know, probably where the most gold has ever been mined in history. A big percentage of the gold historically has been mined there. But there's no evidence of that yet. There's a lot of surface gold boulders and nuggets, and that's really exciting and encouraging. But if this theory that Quinton Henning has is true, yes, that stock could go to 100. But it's really early. I just don't even feel comfortable. The market cap is very, very high. I think it's being priced a little bit more towards perfection. Whereas with Garibaldi, I mean, we've already got a good amount of evidence that this is a very unique and rich deposit. And that's also the reason why Metallus is not trading anywhere near as high with a market value. It's simply because they're behind. They didn't know about this. They started to, we're going to see drill results for 2 areas. I believe it's the Cliff and the King area first, before we see what they drilled at Thunder North, which is the one that we believe the ore body from Garibaldi connects with. And that was only going to be 1 hole. So, you know, that's what we're looking at for this one. I think they're going to trade in concert with Garibaldi in the short term. And then, you know, we're going to have to wait to find out what Metallus really has. One thing that's really super interesting to me, I spoke with Fiore Aliperti at Metallus 2 days ago. Peter Lightfoot, Dr. Peter Lightfoot, who's really the foremost thought leader on this, on nickel, massive nickel sulfide deposits in the world. He's helped Garibaldi quite a bit. And, you know, he is now on the Metallus team as well. And he will be meeting with Fiore and the Metallus team next week. I believe it's Tuesday and Wednesday. So my guess is that Metallus and Lightfoot are going to have a lot more information. I can't say for sure, but, you know, I think Lightfoot believes that not only is there a lot of this ore body on the Kirkham property south of the E&L Garibaldi's, but we'll see if he believes if Metallus has the source of the ore body. Now, we don't know yet. That's one thing that was clear with my talk with Fiore. Garibaldi doesn't know, Metallus doesn't know. It could be Metallus. It could be Garibaldi. We'll see. But Metallus has got a tiny market cap. You know, I don't know what it is, 60 million or something, where we have, well, 30 million shares. Yeah, 60, 70 million bucks. I mean, if they have Voisey Bay times 4 or Norilsk here, Metallus could go to 30 bucks, 20. I mean, it's huge upside. It's huge upside. It's not small. but it's very speculative at this point. Let me be clear, because we just don't know a lot of information. So let's see here. Please comment. How are you feeling about GGI going into assays of the first holes and beyond? I feel good about it. My gut tells me that they're going to release the assays and they're going to be very good, and the stock will start to fly again. But we just don't know. You know, that's what we're waiting for, and I am purely speculating at this point. PVG in Canada, I mentioned already. I'm very bullish on Pretium, and I think they're going to mint a lot of money in the new bull market, and they're executing very, very well. Comments on TLRS, so Timberline, VRCSF, which is Valterra, and TGRUF. This must be a U.S. investor. That's Encore Energy. My thoughts are the same. You know, it's they're cheap. They're all cheap. The cheapest of them all on the gold side is Timberline. Timberline's got 2 million ounces of gold, and they've got a very, very low market cap. And the question is going to be, do they get a partner to shoulder the option payments that are coming up? And I think they will. I bet they will. The $2 million payment next spring is very feasible with the group that is coming into the deal right now. And so, and our group, you know, $2 million we can do. The 8 million, I would not want to try to pay that or raise it out of equity, but somebody else will. This is too nice of a deposit at Tallapoosa and Appaloosa. Huge potential, late stage Nevada, 3/4 permitted. You don't find these projects down the block. The recoveries are low, but the net recoveries, when you take the grade into account, are very good. They're very high. They're top 10% for Nevadas that are similar in terms of those that are producing and being taken into production. Valterra is just dead, you know, in the water. It's slow. They need to raise a little bit of money. They have 2 really interesting projects, Swift Katy in Canada and Weepaw in Nevada, which has a lot of blue sky potential. They're working on raising some money with flow-through financing now. We might do a little bit of non-flow-through, but you know, this is an earlier stage play, as I've said all along. A lot of potential, but also they don't have the resources yet. Like a lot of these other companies that we're behind, we already know they have a certain amount of assets in the ground, which makes me feel good. Valterra is more speculative because of where they are in their development, but I'm still bullish. I still have my position, and I will be participating in the upcoming financing with Valterra as well. And then with Encore, I mean, you should know my thoughts on this. They listen, on uranium, my thoughts haven't changed and they won't change. Uranium is one of the cheapest opportunities in the stock market, period, in the world. It's dirt cheap. We've been 6-7 years into a bear market. A bear market will turn into a bull market. When that happens is the big question. And I don't have that crystal ball. I think it's going to be soon with what we're seeing from Cameco cutting production, basically shutting down their big mines. 10-12% of global supply is being shut off in 2018. This is the type of activity that you see at the end of a bear market. So what can you do with Encore or Cameco or Appia or Anfield or Mega or Westwater? You can buy them all now at these prices. And if you can wait and not worry about week to week or day to day or month to month, you'll make a fortune. People are out there, you know, chasing crypto gains. And I mean, I have friends of mine with Bitcoin. What do you think of Bitcoin? Everybody's getting rich. The stock market's at all-time highs. Let me tell you something. If you want the easiest investment opportunity to make a lot of money on, if you give yourself 5 years, it's uranium stocks like Encore. It's a no-brainer, but people don't want to buy stuff when it's not moving. They don't want to buy it when it's down, and there's no action there. They're dead. So you have to be able to buy it and forget about it and be patient. And Encore is one of the cheapest stocks in the uranium sector, if not the absolute cheapest. They have 30 million pounds of resource in the United States through the ISL production method, which is cheaper. These are not usually as big, anywhere near as big of deposits as like happens in the Athabasca or Kazakhstan, but who cares? 30 million pounds in the market cap. The enterprise value that Encore has, they've got like $2 million in the bank. So they're not going anywhere. Where are they going to go? Where is it going to go? Is it going to go to a penny? I mean, is it going to trade less than cash? If this thing goes on for another year or two, who knows? Maybe, we've seen that in the gold sector, but where did we see companies trading below cash? We saw it at the end of the bear market. When you have companies that are barely trading, this is trading for like 19 cents a pound of uranium in the ground. That's insane. It's just not going to last. So I don't know much more of a no-brainer than Encore. If you can be a smart investor and be a bit of a contrarian and not worry about what's going on every other day. American Creek is in the Golden Triangle, Border Sea Bridge, familiar with it. I know American Creek. I spoke with them last year and I passed on it. I forgot the reasons. I think they also have a deal with Tootin and Tudor. I just didn't like they have a small percentage. I'd rather own Tudor Gold, because the project is interesting, but they own like 20% of it, and their share structure isn't that great. So not my play. ANLDF, I just mentioned my thoughts on uranium. That includes Anfield. It includes all the uranium picks. This is the real down and dirty for uranium. The individual companies vary to one degree or another, but frankly, it doesn't even make a difference. They're all way down. They're all very cheap. And when the uranium market turns around, they're all going to go up a lot. When is that going to happen? I can't tell you. I'm reading the big score on your recommendation and agree it's essential reading for us. Good point, Carl. The book called The Big Score. I would highly encourage all of you that are listening to this to read that book. It's about Robert Friedland and the Voisey Bay hustle. I believe the author's name is McNish. They did a great job talking about that discovery, all the ins and outs, what happened to the stock, the promotion side, stuff in the field that happened with the geologists, every different angle, so that if you are in this sector and you end up stumbling upon a situation like Garibaldi or Metallus, that's why I'm so pumped, because these things can be very, very huge, and they can change your life. That's why we play around in the small junior exploration stocks, at least in my case, because if you can hit in a way that is immensely beneficial for you and your family. But you got to be able to wait. You got to be patient. You got to wait for the right cycle, and you got to get a little lucky with some of these guys all of a sudden putting a drill in the earth and striking something that's very, very valuable. But once they do, and you think that in that situation is a big discovery, it's a big ore body that's very valuable, some of these companies can go up way more than you think. They can go up fast. I think Voisey Bay took, like, from their discovery, I want to say it was less than 18 months. Stock went from like $4 to 170 or something where they were bought out. It was less than 18 months. I think it was like a year. So that's the type of stuff that could happen with Garibaldi. I mean, you have people talking about it being like Norilsk or Voisey Bay. We don't know that yet. Some people are saying it's bigger, but if it's half the size of Voisey Bay, Garibaldi is going to be huge from here as well. I agree on the big score. I'm halfway through as well. Good to hear, Nicholas. Rick Norris, any news on Bravada? We already went through that. This is the cold reality on stuff like Bravada. You just got to wait. You got to wait, and you get to choose if you want to buy more because the stock is dirt cheap, or you can sell it and move on and do your thing, or you can just wait. I buy more. When stuff is this cheap and it's one of my favorites and nothing has changed about Bravada being one of my favorites, then I take a bigger risk. I try to get paid for my time for these downtimes. Can you step back and give potential newsletter subscribers such as myself an overview of how you structure your investment portfolio, mix of producers, developers, explorers? Sure. So I'm big in junior exploration stocks. I would say that the majority of my net worth is in these crazy little juniors, because a lot of times when I take big positions there, I'll go into the private placements, and that gives me the warrants as well. And it just helps to take excuse me, big meaningful positions right out of the gate. And it also causes me to wait because I have these stock certificates. There's a 4 or 6 month lockup. I got to try to get them into my broker. It's a pain in the butt with all the paperwork. So it's like, you know, I'm not going to deal with that stuff for probably a year. And I'm only going to go through that headache if I really feel if something's really rocking and I want to take some off the table, or if I just finally get my act together and get the paperwork done. But I'm very deep in the junior exploration companies. I have a lot of money in the producers too, though. You know, I think, and when I look at the developers, I'm not huge on the developers. I do look at like the later stage big deposits, like Nova Gold and Northern Dynasty, for example. If you guys want one pick in the free list tonight that I haven't given you and I wasn't planning on giving you, buy Northern Dynasty. NAK in the US closed around 220, or NDM in Canada. This is the biggest undeveloped copper gold deposit in the world that ran into permitting problems in Alaska that is going to get through that. And there's very, very strong rumors that they're going to announce a repartnering that will value the asset at like $5 billion. And they own 50% of it, and their market cap's less than 700 million. So the stock could double on that news or triple. It's very cheap, just like the rest of the sector, but there's a big potential catalyst. So buy some tomorrow morning. Very confident that that one will work out, and it could work out quick. But developers, I look at sort of at that level. You know, they're not really moving. They have to wait. There's more work to be done, but you know, they're not an exploration company anymore because they found the deposit. I have big positions in some of those, but those are concentrated. Nova Gold, Northern Dynasty. But what I try to do to be wise with taking all this risk, Nicholas, when I hit a big winner, for example, whether it's like a Metalla situation or even like last year when we had some stocks that just ripped. I mean, we had Gungnir go up 20-fold. Some of us that were in that from a penny, you know, went up 20-fold. Bravada, before it's been down at 10 cents, it went from like 3 cents to 40 cents. There was a lot of those situations. Southern Silver went from like 5 cents to 65 cents. We got it in at a dime. So in those cases where you get these big winners, what I try to do is take some off the table, and then with those big profits, I roll that into the bigger companies. For example, a couple that I've been buying recently, and one of them is not necessarily gold, it's copper, Freeport-McMoRan, FCX. I'm up to 10,000 shares there, and some of it's on margin. So that's a good big position for me. Cameco in the uranium space, from a dollar perspective, it's a good size position versus like the Encores and the Anfields, even though I have a lot of money in those, 6 figures, Canadian at least. But, you know, I try to be prudent with, I don't just want to be all in the juniors. You know, it's also a liquidity issue because these juniors, as you know, they really can be tough to sell at certain times. Like even right now, if you need to go buy a car or have a medical emergency or just need some liquidity to close on a house, you don't want to be selling this stuff right now. But if you own, you know, even Pretium or McEwen, which is a producer, even though it's low priced, New Gold, IM Gold, Kinross, those are all stocks I recommended much cheaper. Those and still own all of them. You know, those can be sold in a minute, and there's no problem. And they'll do great. They'll do great as well. They just won't go up as much as the juniors. So to answer your question, I also want to just say I don't just have all of my money in gold and silver stuff. I do tech venture investing. I have alternative investments. And it's also really important, I think, to stress that everybody should own physical gold and silver. It should be the foundation of your portfolio, I think. And it's very, very important to have that there, even though I think on this next move higher in gold and silver, when things start to really rock, the miners are going to finally see that leverage that we all have been waiting for, and it's going to be a big deal versus the metal themselves. But the metals, you should have some of your money, especially from a conservative standpoint. Physical gold is one of the more, are most conservative investments I think anyone can have in any asset class or category. And it's just wise to have some, both with you around, whether it's a safe in your house or some sort of storage mechanism, or you do something like a gold money and store them around the world, or there's other things that I've found that are interesting now. I've just started to open an account in Singapore that I'll share with people after I get my experience, early experience done. Very excited about it. Good storage fees. You can actually store silver there as well. So that's going to be interesting. But that's kind of how I structure it. And I also have, some general stock stuff that we do. There's companies that through Elite Investments that I, recommend that are not resource related, but it's a small piece of my overall portfolio. I would say that at least 60% or more, probably 70 of my overall investable assets are in this area. And if it's not in gold and silver related, either the metal or the miners or the producers, it's in commodities based stuff, because I think that whether it's uranium, copper, nickel, which I'm really bullish on now, cobalt, these things. So I'm very deep in this area, and I feel the booms and busts just like you guys do with my account values. It goes up and down a lot, and I think I've gotten used to it, hopefully. Jurisdictions, I like to stay in good jurisdictions unless there's a special situation like Orca, which we've really done well on in a bad market, and that thing's got a lot higher and more room to run now that the Sudan sanctions are out. But I see deals all the time, Burkina Faso and Congo and European countries and all kinds of stuff. I like North America. Mexico's fine. Canada, US. Look at some of these things that you end up seeing, like in the Dominican Republic, where it's just you got to really be careful. And here's my bottom line with jurisdictions: when you can buy stuff so cheap with safe jurisdictions, why do you go take a lot of risk with another geographic area? Maybe towards the middle or the end of the bull market, when things are expensive here, then we start to look away for bargains and where people are going to take more risk on in those areas, but not right now. Let's see. NNA.V, that's the new Nadina. I have no idea how to value that play. The stock exploded on core pictures. No clue, guys. I have no idea. I'm avoiding it. What's ahead for graphite, graphene? I think graphite in certain capacities is going to do well. It's just a tricky market because, I learned a lot with Zenyatta, where we made a lot of money on that one, and now it's, kind of been dead in the water for a while. But, I learned a lot about the difference between flake and vein and hydrothermal graphite qualities, which can be, really need to be specified for different applications. It's a tough market to really understand exactly how certain deposits are going to fit in with end customers and things like that. But I think graphite, especially with the electric vehicle revolution, will end up doing fairly well. Graphene is extremely interesting to me. It's just that I think that the adoption of graphene, where there's real world examples of it being used, is extremely slow, and it's going to take a long time. And it's just like with RFID chips. That was the greatest story in the world. I was doing venture capital, raising money for the leader in RFID tags back in like 2003. It was the greatest story you ever heard when you thought about all the potential of all these RFID tags going on, everything in the supply chain and all these different sectors. It was amazing. You'd tell the story and people would say, where do I send my check? It's incredible. Well, the adoption just didn't happen fast. It just took such a long time. That company is still around. They're still okay, but they haven't gone public yet. And then that was a 14-year time horizon we invested into that. And it was a Series G at that time. So that's a long, long road, from an investment standpoint. And I think graphene reminds me of that. Cardero, very bullish, Gary, and I'm going to get to your email. I'm going to switch back to the emails. I'm actually going to go to yours, Gary Thornton, because I saw, you mentioned the amounts you put in and then are down on EU Encore. If you saw my comments, buy more Encore, just buy more and forget about it. Just wait until uranium turns. You are not going to lose money on that investment, and you're not going to lose money on the initial amount you put in either. A lot of us bought that stock at 10 or 12 cents when uranium was heating up. Look, it was a false run. We're back down to all-time lows in the sector, and sooner or later, uranium is going to go back up. And Encore's got $2 million in cash with a $30,000 a month burn rate. Where's it going? It's not going anywhere. Jagger Core, we talked about. You're down about almost half on that. I'd buy a little bit more, but that's about it. Maybe just a tad if you can get it at 2.5 cents. And then Cardero, you need to buy a lot more of that one. We were talking about this just recently at a dime. It's back up to 17, 18 cents. It popped into the 20s briefly. Now it's back around 16, 17. Double down on Cardero. These guys have a fantastic story now in copper, cobalt, and nickel. A new CEO, a new ball game, a tight share structure, and also a big position in Centenara, which is worth about $5 million, 2/3 of their market cap, where you have exposure to gold in Argentina. And it's time for you to double down on CDU. I would also wonder, Gary, and this is the case with a lot of people, you've been a subscriber for a long time, which I appreciate. You're down on these, but what have you made money on as well? I hope you've had some winners. Not to say, I want to promote the winners too. Look, I know some people that you guys pick certain stocks that I pick and they go down, and that's the story, and then we're done. But you've stuck around, and I just want to make sure, because we have had a lot of huge winners here as well. Hopefully you've got some of those on the books, or you've already had some big profits that you've taken. If you haven't, then I would just wonder what's going on. Maybe you can email me on the side and tell me what your experience has been otherwise, because there's no reason why you should have all stocks that are down and not have any that you say I'm either up on or I made a big profit and sold on as well. And that's what I want to make sure people can participate across the board. Zenyatta, let me just say with Zenyatta, I just simply don't really worry about it or follow it anymore, because they just have not executed. The stock is now drifting all the way back. I've moved this to a hold or a sell like a year and a half ago, because quite frankly, I'm not a big fan of management. And I like the asset. I really still like the asset. I think that this asset is really, it's valuable, but it's been years since these guys haven't done anything. They've had all these CAs signed, dozens and dozens of CAs for potential offtake agreements or companies that were going to be clients they would supply with the graphite, and they've closed zero. They do a lot of different, university tests and everything. So it's just been frustrating. However, I'm very grateful for Zenyatta, because the bottom line with that deal is that, I found that thing we made it our top pick. It was my first, within the first year of the gold investment letter in August of 2012, picking it at 20 cents, and it went to $5 in 11 months. It was a massive winner. Some people made a lot of money. I mean, millions and millions of dollars were created, tens of millions of dollars. So I'm grateful for Zenyatta, but trying to get that magic back, it's tough, So I think that with Zenyatta, I wouldn't sell it here. It's right back down on support, all-time lows at these prices. Could you buy it? You could, but I think there's better stuff out there at this point. VRTV, I'm not going to get into, because this is the gold investment letter. VRTV is not a company we cover there. That's a non-resource related play, but I'm happy if you want to email me, Maria. I can tell you about that, or we'll update at the Elite Investments. Other books you can recommend, Jory, I'm going to think about that. The Big Score is the one I would say you have to read. One other one that I will bring up, not really finance related, but it's been a life changer for me and a lot of my friends. It's called The Answer by John Asseroff. This might be getting a little bit out there, but this is a book that is very, very powerful about creating your dream business, your dream life. And I find it very helpful because First and foremost, they walk through, from a scientific perspective, they dig into quantum physics, how our thoughts with feeling create our life and what we think about continually and things like this. And I'm very big on keeping my mind fresh when it comes to investing and emotions. I'm very introspective because I think you have to be in this game. And if you're way off with your emotional or your centeredness or your belief system and you're not positive, you're going to get slaughtered. So I don't like to get slaughtered. I like to stay as much ahead of the game as I can. And the answer, so when they lay that framework, they then go through, they give you a few things that I think are very valuable. Number one is tools that you can use on a daily basis to create your dream life. Number three, and probably most important, they ask you questions on what it is that you exactly want in your life right now. How would that look? You don't have to know the how you're going to get it. You don't even necessarily need to know the why, although the why is extremely important. But you want to get as clear as you can on what's next for you. I go through this book and this type of process every few years because there's always something new. But the first time that I did it was when I left my career as a broker of 16 years and became an entrepreneur and started the Gold Investment Letter. And this is powerful stuff. I know it works. If you're not that type, so be it. But it's powerful stuff, and that book is a life changer for any of you that are looking at potentially another career, starting a business, or just want to raise your game in general. All the principles don't have to be towards entrepreneurs, but it is geared that way. It'll help you figure out what's next, and it'll also put some energy out there with your imagination. It'll get your imagination going if you're stuck in a rut about what's possible, and then you get to make some decisions about what you want to do next. So I would highly recommend that one. I hope somebody enjoys that one, and I'd love any feedback if you end up ordering it and getting back to me. I actually have. If you do get into it and you like it and you do the work, let me know, and I'll give you some juice that will increase your results even higher. But you got to go through it first. GoVX, I'm just not in it. We have enough uranium plays, and we're good. I thought GoVX was a little expensive. I mean, it's the same thing though. They're all the same. They're all down, and they'll all go back up when we get into a bull market. So buy whatever you want. I think you buy anything in uranium here if you can wait. Just buy it. Doesn't matter what it is. As long as they're not going to go out of business. If they have enough cash to make it, if they're going to keep going on and they can survive through a further downtrend, then get uranium on the books and just make sure you don't have to sell it for a while. Because even if it's going to go right up from here, you don't want to sell early on. You want to let the cycle play out, because by the time the end of the cycle comes, I mean, you saw what happened with uranium last time. It went to like 150 or something a pound. I mean, it was insane. And that's what can happen in these boom bust commodities and metals. Medallion, my thoughts are, I'm very bullish again, and I've mentioned that recently. Medallion's a buy. We just talked about Metallus. You can hear about that in the beginning. Blockchain space, and then I'm going to get to the email questions, and then we're going to try to wrap up. This is going a bit long, but hopefully this is some good stuff for you guys. Blockchain space is, it's fascinating. I think back a lot to when I was a young broker. I was 24, 25 years old, going into the internet bubble. And I was privileged enough to experience that hands-on in a position of investor, broker, trader, made an absolute fortune in a short period of time, and then lost it all in a short period of time. And some of the things looking back, I remember where I would hear about stuff like there's people that are buying up these domains. People are buying generalelectric.com, and then they would sell it to General Electric, or buy Coca-Cola, or all these different things. And I thought it was a passing thought. And then years later, after the space was substantiated and familiar to all of us, the internet that is, I became a domain investor. I started to buy up a bunch of domains. I still own probably 500 domains. A lot of them are in the investment space. Some of them are in the Bitcoin space. It was my way of getting involved in Bitcoin. It was probably in the first 6 months or a year that it was around. I got to check those out. They might be worth something today. But, in hindsight, looking back, it was such a revolutionary thing, the internet, that, if I would have had some time to pause and look at it a little bit closer, when all this stuff was flying around, and really dug deep and understood the internet. Like, people would talk about Google years later. I'd say, you know, it looks like it's expensive, because I was sort of bearish on the market in 2005 or something like that. And it kept going up for a couple more years before the market crashed. And I just didn't understand what they did, really. Now I use them. I spend tens of thousands of dollars a year with them, and have for years, on advertising. And it's amazing. So with blockchain, I'm going to try to do my homework on it now, because what I sense will happen with cryptocurrencies, I feel very good about this assessment, is that the cryptocurrencies are in a bubble. However, the blockchain is here to stay, and some of the currencies will be here to stay as well. I just don't think that you're going to see this type of speculation last. Just like the internet stocks exploded higher, made people rich and then made people poor, the cryptocurrencies are doing the same thing right now. The internet just kept trudging along and growing underneath it all to what it is today. Blockchain is going to continue to do the same thing, and there's going to be a lot of applications that are put on the blockchain or created on the blockchain that we can't understand today, that in 10 years we're going to think it completely changed our life and how we do things. So it's a very interesting space. We're really early in it. My hope is that what ends up happening is you have some market leaders that surface, and whether it's in the investment side or the crypto side, and then the bubble pops in the next month to 2 years or whatever. I mean, the timing of that is hard to predict. Once it crashes and explodes and there's blood in the streets, it's going to be a great time to be going to buy crypto assets, to buy blockchain, invest in the businesses. And that's when I think that I'll have a better understanding about it. And it's more of the long view, which I didn't really think that long term back when I was 25 years old. But now I do. And, you know, I think there's going to be a fortune to be made in the blockchain arena. And it's so early on, it's important to really learn about it and try to see how these applications are going to affect our lives going forward. It's really fascinating stuff. And I feel like I'm just getting a glimpse of it. But I know that it's real and transformative enough so that it's not to be dismissed. It's to be explored. Let's see what else we've got. I really like the fact that you give bid prices and sell prices, Eric. Thanks, Spitz. Advantage Lithium, I'm not familiar with it, Sandra, sorry. I've seen it, but I don't know the story. Name of the book again was The Big Score by McNish, and then The Answer by John Asseroff. What was that gold stock to sit and wait on? Pretium, PVG in the US. I think it's PTM in the US. The Answer, yep, that's it. Pretium. Thanks, Eric. Okay, we're going to the emails. We do have some email questions here that I'm going to get into that I'm sure you guys will like. I'm able to join. Concerned about TLRS being unable to find so far to JV with a deep-pocketed company so as to shake off the burden of the huge option payment. So this is the risk. This is the deal. This is where we're at. I think that they're going to get a partner to come in. I don't think it's a question of if they get a partner. It's a question of who, and it's a question of the terms. But let's use a worst-case scenario. Let's say Timberline gives up the project, Tallapoosa, and it goes away, and they lose it in, at the $8 million option payment mark because they haven't found anybody in the next 18 months. We still have almost 1 million ounces of gold at Eureka and the Seven Troughs project. So we're basically buying gold in the ground at $10 an ounce, maybe a little bit higher because there's less than 1 million at Eureka. And it's not as impressive as Tallapoosa, obviously, but it's not like if they don't, that it's the end of the world. They would go forward, and I think that in a gold bull market, those assets they have are very valuable. Now, I think the risk is that we get a deal done that is not ideal. And my whole thing with Timberline, because I am the main backer financially of the company and have been, that's with all of you guys helping with these private placements and things. But I make sure, and we just had a new group, Palisade, that put in $500,000 and are bringing their network into this current round, which we brought to the table. And so we're making sure that they continue to move forward. And I think a lot of that risk gets taken out, at least on the survival side from our involvement. and that's important. But I don't want them to do a bad deal. We got into this thing, and if we have to wait longer to do a good deal, I'm happy to wait. I didn't get into this thing to do a shit deal and and not really take advantage of this situation. If gold peaks up a bit, here's what I think will happen. They're going to get something done regardless, but all we really need is another surge in gold above 1400. If we get that, which I think will happen in 2018, probably in the first half of 2018, could be still within the calendar year here. I still think it will happen within the next 6 weeks. Call me crazy, but people are going to be searching for deals like this, and Timberline is towards the top of the list because of the nature, the quality, the size, and the stage of the asset at Tallapoosa. So it's worth betting on, to me. And here's the other thing to consider. Once they get that option payment out of the way with a partner, let's say we announce a partnership next month, and company's going to end up spending $10 million in the ground, and they're going to pay the option payment, and then they're going to own 60% of Tallapoosa or 75% of Tallapoosa. What's going to happen to Timberline stock then when there's no option risk? It'll triple. So you're not going to buy it then. Either you're going to buy it now and you're going to take a flyer on it, or you're going to be too late if that happens. Southern Silver, relentless selling. I don't think that there's been relentless selling. What there's been in Southern Silver and in all these stocks is no buying. When there's slow, steady selling that continues and there's no buying, stocks go down. And that's just the environment we're in right now. It's a buying opportunity in Southern Silver. Any pending catalysts for these stocks? So Southern Silver has the resource update coming any day. I think that could be a catalyst. But again, and Timberline signing a deal could be a catalyst. But I don't know that those are going to happen tomorrow. And the biggest catalyst is going to be an improved environment for gold and silver stocks, and that will cause these things to act a lot better. And that's what we want to see, because it's going to lift everything. Until then, we're going to be able to pick our spots and have some winners, which is why it's important to speculate on stuff like Metallus and Garibaldi. We in premium, we've had a number of big hits since August, which really takes the pressure off. You're not just looking at the gold and silver plays, and you're not just thinking, when's the stuff going to turn around? But this is a long game, folks. You gotta buy stuff when it's cheap, if you believe in it and have conviction that gold and silver are going to go higher. I think silver and uranium are the two cheapest assets, metals, asset classes, as far as the stocks are concerned, in the globe. Silver is very, very cheap, and it's very, very cyclical and very, very volatile. So while it's been dead in the water and everybody's avoiding it, it's a good time to be buying it if you can wait. It's going to pay off. Cregan, let's see. Discuss the pros and cons trading your stocks with U.S. exchange versus the Canadian exchange. This is important, guys, because I still think that people don't quite get this, the way that these things work. If you're a U.S. investor and you have a U.S. foreign symbol, and then the Canadian stock is the actual place where most of the volume occurs, and that's the home of the company. There's a YouTube video that I did all about this whole thing, and you can search it on this channel, or it might be on the other channel that I post some stuff, but I'll get the title and I'll let you know. But it's ideal that you can end up, if it's a Canadian company, traded in Canada. If it's a U.S. company, traded in the U.S. It's really that simple. If you can't, and you only have a brokerage account, if you're in the U.S., for example, and you need to buy the U.S., which a lot of people say, hey, it's not trading. Well, you need to understand that the volume on any gray or pink sheets goes to Canada. So those U.S. tickers, even though they're not as popular because they're just not U.S. companies, they're as liquid as the Canadian stock. So you need to watch the Canadian stock. I have people saying that they're worried about buying 5 or 10 grand worth of these stocks because they don't trade. I own like $250,000 worth of some of these things. How do you think I feel? But it's nothing. it's not a big deal if you understand that the volume flows to Canada in most cases. If it's listed and you see a bid and an ask price on the US side, then that means that it's actually got a listing, an OTCQB, OTCQX, and then the volume's not going to go up, and you need to pay attention to what's going on in that stock. Usually when they're listed, they have more volume naturally. The ones that don't have a lot of volume, look at what's going on in Canada to indicate what the liquidity truly is. Because if you have a situation, remember back in the day with Zenyatta would trade a ton of stock in ZEN, and then ZENYF would have a fraction of that volume, but all the volume flowed to Canada, either on the buy or the sell side. And so you could look at what was going on in Zen.V and really say, hey, that's the volume, because it is the volume. So ideally, if there's Canadian stocks, you go trade it in the Canadian symbol. It's a little tough for us if you're in the US to do it. There are platforms that work. Interactive Brokers, for example. I have a Canaccord account, which I use very frequently, a little bit higher commission structure, but at least I can buy the Canadian tickers. And there's other online ones that you can trade globally. Latest opinion, buy, sell, hold for the following stocks, which have been performing badly of late. Southern Silver we got into, WWR, which is formerly URRE. My answer there is, with WWR, my answer is that it's the same with the whole uranium sector. If you buy it and you wait, it's going to go up. But I don't really like WWRE anywhere near as much as the other ones that I've been talking about, because it's turned into a lithium story as well, which you could look at as a good thing. But here's the problem. The problem is that big money does not like mixed stories typically, and neither do I. Lithium and uranium. Which one are you? Lithium or a uranium company? Well, they're both, and I just don't really like it as much. So that said, when we first bought URRE and sold it very quickly for more than double of our money, the cost average that we should have, if you did it when we did it on the buy and the sells, is like pennies on that stock. So I would say you either just hold it for free and who cares, forget about it, sell it in the bull market, or dump it and put it into one of the other ones like Encore, Anfield, Mega, or even Chemical if you want to take less risk. Golden Predator. So here's the deal on GPY. So it hit our stop loss numbers, certainly in premium. I know I've mentioned this a couple times. It hit our stops. I think it was right below $1. But I never officially said to dump it. I put the stop losses in there and said, you know, keep them if you want to protect your downside. But I never came out and said dump it. So Golden Predator is going down with the sector, but it's going down worse than the sector. There's been rumors that there's issues with the continuity of the deposit at 3 Aces. I don't know that that's the case. I'm not convinced that's the case. I think that there's potentially not an issue there, but I have to talk to the chairman, Bill Sheriff, who also happens to run Encore, and I plan on doing that tomorrow, giving him a call and getting his comments on these things, because it's important. And I should have done this actually a couple of weeks ago, or about a month ago when I heard this, but I didn't see any evidence that this was really the case in the last news release they came out with. They actually focused on the continuity being there, and so my impression was that it was just a weak market that was being exacerbated by a rumor. And I've thought about the reason why I want to call him now as well is I would like to buy more stock. If there's not a problem per se in the deposit itself, you know, this is a big discovery. There's a lot of potential there, and it's time to buy more. And it's probably getting whacked also on the tax side. So I will keep you updated on Golden Predator within the next week. These other ones are premium plays, so I'll have to get back to you on that, Cregan. So hold off with me on that. Let me go back real quick to YouTube, see what we got. Stressing patience is priceless. You know what? A lot of times it is. You know, I look at the situation in gold miners. You know, back in 2015, when I would say we're 5 years in, it's the worst bear market we've seen in the gold miners. You know, it's time to chip away, accumulate, buy, and you know, it was just not, we're not getting very many people taking action. And that's when you could have bought, gone near at a penny, a half a penny and a half for months. And you'd be up 10 to 20 times your investment within 18 months. But those were all over the place. But it was at the end of a bad market, and nobody wants to take action then because you think it's going to continue. Well, guess what? In commodities and precious metals, it doesn't continue. It changes at some point. Like uranium right now, if you can be patient and you're a buyer, especially if you didn't own this stuff all through the downtrend, just buy it. You don't have to pick the bottom, and you don't have to pick it at the absolute end. Just start taking positions. And the way that I play a lot of this stuff is I will accumulate. Like Encore, for example. Every month I buy more of that stock while it's down here. Under 5 cents Canadian, every single month for probably the last 6 or 7 months, at least. I buy more every month. It might not be even a lot. Some months I buy 100,000 shares. But I've got like 2.5 million shares of that stock now. It's a lot of money for a penny stock. And you know, when it turns around, it'll pay off in a huge way. And I also didn't, quote unquote, blow my wad by buying it all and trying to pick the bottom. I don't care. The longer it stays down, the more I'm going to own when it turns. And when you have that attitude and you can be patient, that's what makes you successful. You can't chase the hot deal of the day unless you're doing it with more money that you have outside of your prudent, cheap value, contrarian money, where you know that you're going to do well because you're buying into value. Endeavor Silver, Endeavor Silver underwater, negative sentiment, nice upside when silver takes off. Yeah, exactly. It's probably going to double or triple when silver takes off, just like all the other silver stocks. I don't know that it's any better or worse than any of the other ones. Would love to buy Mux at 66 cents again, please. Hey, look, me too, but I doubt it. Anything can happen as soon as. It is too. Okay, back to the emails real quick, guys. We're going to try to wrap this up in the next 10 minutes or so, but I do want to get to all these for those of you that sent it. So Kevin had a couple of good questions. What has worked best for you regarding position sizing and profit taking with extreme volatility in the commodity sector? It's a good question. And what I tend to do is, it's hard to really map this out because I don't do it every time, but in a lot of cases I do. And because we have the whipsaws, like let's say we have a secular bull market going on right now in gold and silver and mining stocks. But these big corrections can happen along the way. So it's more like this, and you're going up like that. And these things are super volatile. So what I tend to do is a couple things. One, for example, position sizing and profit taking. I will have, if I have a big position, which makes me feel good, where I have a certain amount of it earmarked for the long term, meaning I'll buy a core position, and that core position, like let's say Bravada, for example, let's say I have 500,000 or 1 million shares of something like that at 10 cents, 15 cents, 20 cents. I put it on the books as a junior core position. I'm not looking to really do too much with that, except for maybe when it triples, because I believe that gold and silver are going to go into a euphoria phase eventually, where these things like Bravada could be trading at $5 or $10 a share. Believe me or not, I think it's actually not only possible, but it's likely. I just don't know when it's going to happen, but it will happen because it happens at the end of all bull cycles. These are stages to these things. So I may sell a third of it to take my principal risk off at some point at a triple, call it somewhere in there, use that capital and put it into other plays and spread it around. Now, the stock may come all the way back down. And it comes, this happened with Mux. So let's look at Mux. We bought it at $1. It went to $5. I sold the principal risk out of that one. If you recall last summer, we sold it at between $4.90 and $5 US. Took the principal risk out. It came back down to $3. And I think it was around that price that I ended up saying, I'm buying it back, $2.50 to $3, somewhere in there. Now it's under $2. So what do? I'm buying more. I'm buying more stock because I believe that So now I've taken not only what I've sold and bought it back on the share level, I've bought extra, or I've bought what I had on the profits back and extra on top of that. And the lower it goes, because I'm a big believer long term, I'll continue to add it steadily. It's a question of price and time. So I won't do it all at a certain price. I'll do it along with time if we don't know how long this is going to last. But then what ends up happening is I'm overloaded in that stock. By the time it turns around and it goes up, say McEwen goes back to 3 from 2, or say it goes to $1.75 and I'm loaded to the gills in it, and then it goes back up to 275, I'll probably take a third of the position again, maybe a quarter, and sell all that off. And the last chunks that I bought would really just be for the trade side of it. I still have the core position from when I bought it way beforehand at $1 or $1.50 or somewhere in that range. So that stuff is already secured. I'm not going to think about selling that, and I keep that very clearly in my portfolio as a core position. So that amount of stock, I just don't get shaken out of it in times like this or in good times. And I say the way that I'm going to sell that is going to be either if the company gets bought out, or I think that the end of the bull market in gold and silver are near, and I'm going to dump core positions and shave those off because I think that the overall bull market is pretty much coming to an end. And that day will come, and then I will sell, you know, positions like that, either all of it, or I'll keep a little bit on just to play. But that can be a mistake, just keeping some attachment when you have all the craziness going on. So what I like to do is I like to have core positions, and then I like to get paid for my time, where I will trade with, you know, third to a quarter of the position. The best way to play this stuff, and you know, some of you are not accredited investors, but if you are, it's stupid not to do the private placements, because in that case you can end up like today. I could sell all of my Gungnir at 14, 15 cents from a private placement that I bought at 3 cents with a warrant at 5. I could sell it all. So let's say I did like 1 million shares. So 1 million shares at 3 cents, 30 grand Canadian. I could sell it all at 15 cents for 150 grand. I can send 50,000 into the company and exercise the 1 million warrants. So I still have 1 million shares and I have $100,000 profit. Or what I would normally do in a case like that, and I tell premium and elite people, is you sell enough at that price where you can sell a third of your position at 15 cents to exercise all of your warrants at a dime, at a nickel. And in that case, then you have a situation where I would have 1.666 million shares of Gungnir. I didn't have to come up with any more money. My cost basis was still that initial 30,000 Canadian. And then at 1.6 whatever million shares, what is that? 300 grand. So, you know, it gives you a lot of flexibility if you're able to do that with the warrants. And so that's in general. I'm happy to give you a specific example or two if I think about it, Kevin. The second one, your personal experience, 1 to 2 trades that didn't go as planned and what you learned from them. Great question. So I'll give you a couple. Newcom. I was a young broker, very young, and there was a company. So this company, Newcom, NWCM. They also had warrants on it, and it was a couple bucks stock. It started to become a high flyer, and it went up to $5 or $6. And we saw the numbers coming out, and big growth. They were selling modems at the time. There was this notorious stockbroker or stock promoter named Rafi Khan, who's a very interesting character who was behind it. He would promote it, run it up. And then, you know, there was a CEO that sold off 1 million shares. And, you know, it was kind of like, what's this guy doing? It was a lot of stock. It was like a big chunk, 15 million bucks worth or something. It was a lot. And when we would talk to the promoter, he would say, you know, he's just taking profits, and he would talk it away. But the thing that I remember most is that every time the stock got up to 6 or whatever, and we were hearing a lot of hype and the volume kept coming in, and I would buy it. I was buying it at that time. I hadn't been around a long time. I was very, you know, susceptible to impressions, and it would get waterlogged. It would stall out there. No matter how much push would come, it kept hitting that resistance. And so it ended up where the thing collapsed. It ended up going to zero. I think I got out probably down 50%, got my clients out of it. But I thought it was going in, I thought it was going to triple like fast because there was just so much momentum on the numbers, and then Rafi was hyping the heck out of it. And I realized that there's a couple things that can stop trades, and you have to be very careful about these situations no matter how good the story sounds. And that is, if you have people that are insiders, not insiders that are within the executive team, but insiders in terms of the stock, the guys that ended up taking it public, had the cheap paper. This happens a lot with Vancouver stocks and OTC companies where you have a group. I mean, you saw some of this like on Wolf of Wall Street, but this stuff happens all the time. It happens in a way where some people, there's nothing wrong with starting a company and getting cheap stock and having an early round and cheap round, and the stock goes up and people take some profits. But if it's all done in concert so that people can dump on the public and run off to the next deal, and then the thing collapses, it's fraud. It's very deceiving, and it's criminal activity, really. So if you continue to see paper coming in at every good news run, or a big promo comes in and all of a sudden the volume shoots up and the stock price starts to go up, but then all of a sudden you see all this volume coming in and it just can't go up more, it's not a good sign. That's insider selling. That's the people that have the paper, the cheap paper, or they're the hot money, or they're getting a deal where they came in, to a private placement for marketing services, and then they try to pump it up and then they just dump it. The other thing about that with the Newcom, and this happens totally as a separate issue, but it's just as important, if not more important, you have to look at what's going on with the structure of a security, because there's a lot of these OTC companies that get swindled by financiers or investors that say, we'll give you all this money for convertible stock. It's like, convertible notes type of stuff. And there's other structures like that, convertible debentures in some cases. You have to watch out for that, because the sharks, what they do is they use the conversion as a way to cover their shorts. So they'll actually come in, and we see this with penny stocks, all kinds of companies. You could have $1, somebody gives them money, $1 million, and the stock's at $1. And then they know that they can convert X amount of money's worth into shares. So they start selling naked shorts. They don't borrow, they borrow the stock. They don't borrow the stock. It's called a naked short. They start to sell it, and they drive the price down. It could be all the way down to 50 cents, 30 cents, 20 cents. And then they know that they can convert their note into shares to cover and make that profit. They have no interest in the stock going higher. It is only interest in the stock going lower. So there's people like that out there everywhere. That's why the stock market's so crazy. So I learned a long time ago from not only Newcom had some of that going on, but another company called Sterling Vision Centers. I think it was IC was the symbol. And it was a NASDAQ deal, and the thing just had some of these convertibles on there, and it always would hit a certain limit, and then eventually it just got destroyed, and we ended up finding out later in some of the filings that somebody was out there shorting it to convert cheaply and cover their short. So you have to watch out for structure. That's why I'm so big. There's not a lot of that stuff in the Canadian side, which is good. You just have to be careful about too many shares, too many cheap shares, whose hands are they in, because these are the things that cannot go your way and not go as planned, as you say. The other thing I would say real quick is in 2005, I was doing venture capital with a merchant bank in Chicago. We were investing in late stage venture stuff, high profile deals, super interesting deals, very late stage pre-IPO stuff. And I had some very wealthy clients, and I ended up getting referred into a chain of mortgage executives. And one of the big guys, a couple of the guys, I started to probe them, and I said, this is a bubble. This whole mortgage situation, subprime looks like it's just going to be a disaster and this whole thing is going to come down. So I started to get that sense, and I ended up talking to one of my big guys. He was a top executive, making $2 million a year at one of the companies that was bought by Merrill. I forgot the name of them, but in any event, they're at the top of the food chain in that business, and he essentially confirmed to me that it's all a house of cards. So I knew it. I knew it from the inside out, from my analysis, and then also from the inside out. I didn't have a lot of money back then. I think I was just kind of trudging along at that point, making some, losing some, spending some. And so I didn't have a lot of capital behind me, and I ended up starting to buy puts on the most crappy looking subprime lenders. I remember one of the symbols was LEND, L-E-N-D, and it was trading at around 45, 47. Anyway, I bought puts for months, and Jim Cramer came out and recommended it, and it went to like 57, 60, 65 back in the 50s. And if I had the patience and I realized that I could see something like that through, this is where patience comes so into play, because markets, they say, can stay irrational longer than we can stay solvent. And that's a very telling cliche, but it's very true. If I would have had the fortitude to stick that out, you know the story. One of the best books I've ever read is The Greatest Trade Ever, all about Paulson's trade with shorting subprime and making $20 billion. That's kind of what I was onto in a very small way, and I just didn't see it through, and I didn't wait, and my options started to expire, and I just gave up on it. I think time went by, and I was on to the other hot deal, and I just forgot about it instead of having the fortitude to stick with my gut and the information that I had, and missed a massive opportunity. So the trade didn't work out as I expected, because I thought it was all going to crumble imminently, and it didn't. It's just like uranium now. You think it's going to go up, but it won't. But it will eventually, and you have to be positioned for that. And that's a similar thing that happened to me there, where nowadays, when I have this type of conviction, I stick it through. I make sure that I have the capital to sustain me in other ways, but if it's money that I don't need for the next 3 years, I build my positions, I accumulate, I build massive positions in some of these juniors. And I can tell you that when gold and silver and uranium and the commodity stocks end up going higher, I'll be a very, very wealthy guy at that point. I do well now and everything else, but it's I'm positioned for a windfall, and I'm hoping a lot of you guys end up experiencing that with me. Okay, only a couple more, guys. Patriot Gold. Ken Berry was at Jekyll Island event. Any info on Northern Vertex that would affect the value of Patriot's imminent royalty payout? So Patriot's a love-hate deal that I love the story. They've got a 3% juicy royalty on the Moss mine, which is going into production now, like literally in the next 2 weeks. And they're going to end up producing about 40,000 ounces of gold a year, which is going to flow 1.5 million in cash flow to Patriot, which has a very low market cap. They have another really great royalty at Bruner with Canamex. They have some greenfield projects. Stock is cheap, but the management just doesn't do anything. They're not active enough in telling the story, communicating with investors, or doing other deals. I've tried to help influence that, and it just is a slow game. I have some confidence in them, in terms of they're watching the store. They're just not aggressive enough for me. So that's where the hate side of it comes in. But the bottom line is cash flow moves stocks, and that's what's going to move Patriot. Straight up cash flow. And there's not a lot of 8, 9, 10 cent stocks out there that are being driven higher by cash flow. So it's a hold or a buy. We talked about Golden Predator, and let's see if we have any more. I think we have a couple. Gold platinum ratio. Here's the thing. I was very bullish on platinum not long ago, and I've sort of lost that bullishness because the whole electric vehicle revolution is what concerns me about platinum. We're already seeing with the early penetration, platinum demand cool off, and the EV revolution is real, and it's going to continue to penetrate for a long time, probably decades. and I think it's going to weigh on platinum. I don't have as much confidence in platinum as a monetary metal as I do as gold and silver. So therefore, I own platinum. I've been buying platinum. I would say probably every 10 or 20 ounces of gold, I buy like an ounce of platinum. Just even on the physical side, I have coins, but I just don't have a lot of conviction in it. And then you mentioned the crypto space. One thing I'm going to say about crypto versus blockchain is I talked about blockchain. It's clear to me that Bitcoin's in a bubble. It's also clear to me that Bitcoin Cash is what you want to look at instead of Bitcoin. If you're looking at going into Bitcoin at this point, I mean, we got into Bitcoin at 450. I sold some. We shorted the ETF. We made money. I got back out of it and let the thing go higher. And I own Ethereum and Litecoin, mostly Ethereum, mostly with play money. I mean, I don't have a lot of confidence in this stuff, mostly just to be around it. And Ethereum is really interesting in terms of all the different ICOs and apps and applications that are being built on the Ethereum backbone. And I think that's going to give it a lot of sustainability. Bitcoin is pure speculation as a cryptocurrency. There's a lot of issues with there's not a lot of applications that are going to be done on top of Bitcoin, but the Bitcoin Cash fork that occurred, it's clear to me that the smart money is going into Bitcoin Cash. There's two things that are going to be real issues for Bitcoin sooner or later, and that is, one is the cost of transactions has skyrocketed just in the last week. It's way too high. I don't know what it is today, but it's just too much to be a currency and a vehicle of exchange. And the second thing is, let's see, we had the cost, and the other one is the speed of processing transactions is way too slow. It's like 7 a second or so. I mean, it's really low. It's just not going to work. The other thing is the endless amount of ICOs that are being produced is really dilution of crypto in general. It's not dilution within Bitcoin. And I would just remind everybody, Bitcoin copied all of the properties of gold because they wanted to be like gold, with the limited amount of supply every year, with the mining, the fact that Bitcoin's logo is a gold coin to establish trust. The real currency of millennia is gold and silver, not Bitcoin. Bitcoin's going to have some interesting action going forward. I do like to dabble in the cryptocurrencies, but I would say Ethereum and Bitcoin Cash would interest me much more if you're looking to speculate. Jagger Core, we mentioned. Blockchain Juniors, again. So we gave one blockchain crypto security play that was in premium that I mentioned to free members that went from 25 cents to like 80 cents in a couple of months, the last couple of months. It's down now to like 55, and maybe I'll recommend it to you guys. I'm not going to do it tonight though. And so I'm keeping an eye out for that stuff. We'll probably talk about more of those type of plays outside of Gold Investment Letter, but from time to time I might get into it at Gold Investment Letter. We have just a couple more. This is a question about a bunch of stocks that I don't cover: Aben, Millrock, Romeos, SK, Brixton, Jackson. The only one that really interests me a little bit there is SK. The other ones I'm not super familiar with. I've avoided Aben. Romeos maybe, but don't like the share structure, even though that's the Appia guy. Let's see. What is your top pick? I don't know. I don't know about that. I have a lot of them. And I think we have one more, and that's Golden Predator again, guys. I'll look at the comments here to see if we have anything to note, and then we'll wrap it up. Okay. Deep Yellow, no. I don't do a lot with the Australian stocks. Any strategy to protect against short attacks? There was also another thing in here about manipulation. I think I glazed over one of the emails, so I just want to address that really quick. Protecting against short attacks, listen, junior miners and penny stocks don't get shorted nearly as much as people talk about. if you can identify, if you tell me you think that there's 10 short attacks that go on in certain stocks, I bet one of them maybe would be a short attack or a short seller that was knocking it down versus being just somebody dumping their stock. And then in that case, people like to point the finger at shorts when it's not easy to short penny stocks. I'm a fairly large investor and I can't find stock to borrow for that stuff. It's really hard, you know, and it's hard to short stuff in general, but when you start to get into the low price securities, you got to be a real pro. It certainly happens, but I just think it's overestimated how much shorts happen. It's crazy to me how much people talk about shorts. But the only thing I can tell you about protecting against it is, you know, if something gets too high or you get big profits, take some off the table and, you know, sell into big strength and buy into weakness. And, you know, don't worry if it's shorting or if it's selling. It doesn't matter. It's the same thing. But don't confuse short attacks for just selling stock, which can be for all different types of reasons. And the other thing is with regard to manipulation of gold and silver, I think this is another thing that people look at and they say, oh, manipulation, manipulation, manipulation. Is there some of that going on? Yeah, but it's called the market. You know, I don't worry about that stuff because I think that even governments can only delay the primary trend. They can only delay it. They can only, big banks, whatever. You cannot change the primary trend of what's going to happen with gold or silver. They can delay it, they can deny it briefly, but it's not going to end up being sustainable. So therefore, I don't really worry about it that much, and I try to take advantage of those things when I can. Do people come in? So what's manipulation? So gold can't get over 1,300. It's a hugely key technical area, as I've talked about, like on the monthly with the breakout above the trend line. So what is that? Is that people holding it down? Maybe the shorts, that people that are very, very short, the banks, they don't want it to go above there, but is that manipulation? No, they have every right in the world to short at that key point. They don't want it to go above that. Just like if you're a buyer of something and it's about to break support, you're going to support it because you don't want it to, because it's going to accelerate the decline and it's going to accelerate them having to cover their shorts if it goes higher. So it's big money, but that doesn't mean that it's a manipulation. Some of them manipulate stuff, especially on the COMEX and all the paper gold trades. But, you know, I think people worry too much about that stuff. And it really, a lot of times, is just the dynamics of the market trading. And then Stephen Murch with Northern Dynasty, yeah, very bullish. I think you guys should get some of that tomorrow. And I think I'm going to wrap it up there. I really appreciate everybody coming on. We had about 100 people on tonight. Hopefully we'll have hundreds more that watch this, and I know we're going long. It's been almost, it's been over an hour and a half, but if this has been enjoyable to you, shoot me a note. We'll try to do this a little more often, and maybe if we do, we want to have so many questions and we can kind of knock it out in 45 minutes or an hour. Have a great night, everybody.